that provide favorable tax treatment, not to you, but to the owner of that BOLI, that provide favorable tax treatment to activities or transactions that lower taxable income through deduction or credit. These things are so deep that we have to go all around here and there because they're all intertwined. This is the reason why in most of the videos in the past, I take the time to speak slowly. Stop, pause, speak slowly, because if you don't comprehend those basics, all these things we're talking about now will just sound good to you. You wouldn't really see it or connect it or see it applicable to you or whatever it is you're doing. Such insurance is used as tax shelter. It doesn't qualify for tax if it's used as a form of funding. For the financial institution, aka your bank, which, remember, financial institution is just a brick and mortar. Banking is the function, which BOLI is involved in, which tax shelter is involved in, aka infinite banking, which leverages its tax-free saving provisions as funding mechanism for employee benefits. So if bank is doing this by taking insurance against your life and it's given itself and its employee, aka the shareholders, when it speaks about employee, it's not speaking about the cashier or the teller or the security guard. Don't get this part twisted. It's talking about the inside owners, the private owners, for their benefit. Why? As a funding mechanism. You can do the same thing. This permanent life insurance policy is often purchased for high earners and or board members of banks. See, when it said employees here, it's not referring to that man or woman that you see out there thinking they're doing something special because they work in a bank. It is referring to the board members of a bank. I wonder what type of entity has board members called board of trustees. I wonder, right? Who knows? Maybe the Express Trust, which pay for the policy and benefit. The policy on them remains in place. Oh my God. This last part where it says if an employee covered by BOLI leaves or is terminated, the policy on them remains in place, is what's called that 110K. Even though 150K was the value of your labor, but they charge you a fee from taking out of their trust as a form of punishment. But now you have 110K left. That 110K that you have left is considered an income and a capital gain. And these people have the audacity, they will charge you a capital gains tax from taking money out of your 401k. Capital gains tax is the levy. Levy is just another word for tax. On the profit, meaning your money that you take out of 401k is considered a profit the moment you cash it out. A profit that an investor makes because that 401k is actually an investment account. How many people within their work or their financial planners, how many people tell them that? Because your financial planner, that 401k, just like any bank account, is being used to invest in something. And when you cash out of it, it's as though you're making the money from that investment account. So they charge you capital gains tax. Capital gains tax is the levy on the profit that an investor makes when an investment is sold. It is owed for the tax year during the investment is sold. The long-term capital gains tax rate for 2022 and 2023 tax year are 0%, 15%, 15%, 20% of the profit, depending on the income of the filer, the income bracket adjusted annually. So if after they charge you, advise that this rule shall not apply. However, to any amount received, what rule? The rule governing the entire Internal Revenue Code shall not apply to any amounts received, whether in a single sum or otherwise under a contract and full discharge of the obligation under the contract, which is in the nature of a refund of the consideration paid for the contract, meaning under any circumstance. If there's any contractual agreement where these circumstances, the amount received shall be included in gross income. Gross income is the amount before tax is considered. Net income is the amount after your monies has been taxed. So before your monies is taxed, as you
complete 29-minute video to the second part has been uploaded on Patreon on January 22nd. Take care. Best of luck.